Hello, and welcome back to Explain the Charts. Today, April 22nd, 2025, we're taking a close look at Bitcoin, or BTCUSD, and what the recent news and chart data are telling us. We're seeing headlines about Bitcoin potentially rallying to $90,000, so let's dive into the charts and see if the data supports that. I'll be going over the daily, hourly, and 15-minute charts to give you an in-depth look at what's happening. First, let's take a quick look at the news. Bitcoin is seemingly decoupling from stocks and more closely resembling gold, especially with the dollar weakening. Trump's tariff concerns are injecting uncertainty into the market, driving investors towards Bitcoin as a safe haven. MicroStrategy continues to increase its Bitcoin holdings, and MicroStrategy has seen impressive returns, further fueling bullish sentiment. This news, along with many others, can certainly be affecting the chart. Now, let's turn to the daily chart to get a broader perspective. Looking at the last few months, we can see a general uptrend, with some significant pullbacks along the way. Notice the high volume spikes corresponding with these dips, indicating strong buying pressure at lower levels. We can clearly see key support around the $60,000 and $65,000 level, which may act as buy-the-dip opportunity if we do see a significant retracement. We need to monitor how it responds to this level. Now, let's drill down to the 1-hour chart for a closer look at recent price action. Here we can observe more granular movements, including consolidation periods and breakout attempts. Pay attention to the shorter-term moving averages, which can act as dynamic support and resistance levels. Currently, it seems we are around 87,500, with resistance around 90K and further resistance around the previous highs in the 98K to 100K range. Finally, let's take a peek at the 15-minute chart for intraday trading opportunities. On this shorter time frame, we can identify potential entry and exit points based on candlestick patterns and volume analysis. Be cautious of false breakouts and sudden reversals, especially during periods of low liquidity. Based on the current chart, these are levels to look out for. Significant support in the $60,000 to $65,000 range, which may be a good buy-the-dip opportunity. Resistance around $90,000, then higher resistance at $98,000 to $100,000 range. I think we'll likely see 90K tested in the short term within a week, with a 70% chance if positive sentiment continues. A break above 90K would likely occur with incoming buyback Treasury news, increasing the likelihood of the $98,000 to $100,000 level being tested. Be cautious of macroeconomic factors and the news as always. Thanks for watching, and don't forget to subscribe to Explain the Charts for more in-depth analysis.